Good afternoon, everyone. Welcome to one more sort of session on embedded finance. So there you are. How are you, Atal?
Hi Samir, good to see you. Hi Shashank.
Hello, sir. Good to see you after a long time.
Yes,
Good to see you.
Yeah,
I hope all well at home.
yeah. I think, or let us assume that we are presuming it is okay, right? So if it is there, let's क्या कर सकते हैं? I he's telling me that work is a good distraction these days, right? So I think that's
Indeed.
we're just living by the day, right?
Yes.
So, hi everyone. This session is primarily on embedded finance, and we will run the session for almost something like 40 odd minutes. And after that, we'll get into a Q&A session. And of course, we'll try to give a provision for Q&A during the session. My request to you is that, and the session is all about two areas. One, what it is, right? I think embedded finance, a lot of times you will learn how it is, sort of what exactly it is. But how it is built, nobody talks about, right? So, and we have been right now in the journey of building multiple embedded finance companies as well. And the idea was why I had was maybe we can use these sessions primarily to also share how it exactly it is built and created, right? So that will ease a lot of pressure on you saying that karna kya hai. If some of you are either as a concern, so I think many. Shashank, can you just ensure that people are
Yeah.
because I think it's coming on my screen. Okay, so normally what happens is that we know कि theoretically क्या होता है exactly मतलब लोग बात करते हैं कि this is how it is done. So we thought that we'll use it as an opportunity primarily to ensure that everybody understands कि होता कैसे. That's the focus, not the theory side of it. Theory side of it, I'm sure there's enough YouTube channels and all of that talking about it. But anyway, so largely we start right away our session. Shashank, can you just ensure that it moves faster because just in.
And can you just also, if in parallel, also assign Matri the co-host?
I just want to give me one sec. I'm not able to give her rights. Just one sec. So thank you. I have to run for it. I can't give it right now.
No issue. Carry on.
I think so. Welcome to everyone here. This is Sameer Singh Jaini here, and I'm a sort of co-founder as well as a sort of guy who runs the ground activity also for the firm, the Digital Fifth. And I'll quickly introduce the firm as well. And I have with me our co-founder Shashank, who heads consulting for us. Between both of us, we have built enough banks, enough fintechs in the last so many years. 2 decades I've been doing the same business, and slightly lesser, younger. He's much younger, so he would have done maybe for 12, 14 years. And then for last few years, we have been running this firm called the Digital Fifth. We basically work with lot of early stage startups. We work with a lot of banks in setting up their businesses end to end, and it can be for digital strategy for people, as well as for some we run basically partnerships for a lot of entities, and we also work a lot on early stage startups, getting them sort of understanding on how to build it, as well as on training side. So both sides we work on. In terms of coming to the business itself, I spoke about consulting, partnership, and training. Consulting is the bigger element where we are trying to focus on creating an alternative to Big Four. Not that we are competing with them, but we are creating an alternative to them in the segment. And we work with India, Middle East, and Southeast Asia largely. Beyond that, we have not ventured in. And we are based out of now home, not from anywhere else. So I won't say Mumbai because now everybody's at home. I just hope that everybody is safe and so healthy as well, because these are very, very tough times for all of you. Now, I think this is just one slide to just show what kind of customer base we have. And the base is across board. We work with banks, we work with NBFCs, we work with government entities, we work with some of these embassies as well, and a lot of startups in the market. That's largely the segment we cater to. Just one event which is way ahead, just right ahead, which is coming up is Bazaar. So Bazaar is where we do one-on-one connect between startups and banks. And we've started the first series of startup and bank meetings going immediately right now. So for example, in this year, in this month, we have one. And this is the event coming on 26th of May, where we're trying to get almost 15 odd startups and around 15 to 20 banks and NBFCs, any buyer who's looking for partnerships. And this is an open event. Anyone who's interested and who who can either take decision or enable the decision, I think they are requested to join. You can reach out to my other co-founder, or I'll share the email ID later on the day, or you can also fill in the feedback form and we'll share it with that. So in the FinTech Bazaar, you can all enroll if you're interested, but it's very, very specific marketing making activity, and it's not a place where you will see a lot of demos. It's one-on-one activities. We do a lot of trainings. I think we are the largest training provider in Asia, and we are purely focused on fintech, open banking, and financial blockchain. And we do done a lot of sessions with a lot of institutes. Coming to one-day trainings, which are coming up in this month, is 23rd. We have one event training coming up, which is focused on open banking. And then we have on 13th of June something coming on digital payments, and then again on 11th of July it's coming up on lending as well. So back to back, something is happening every month. You can actually use them. And then we also are right now running a long-term program called FinTech, Open Banking, and Financial Blockchain. In many of you are already there enrolled into it, and the next batch is starting in September of this year. And my session, if you are interested, you can join there as well. And that's what I was saying. This is almost 130-hour of course, and we definitely work on practical aspects of it rather than very theoretical, because we are also coming practical perspective, and also we work with industry people to come on board. So rather than bookish knowledge, they are the ones who actually provide also practical knowledge. So these trainings are again led by the market, not by just us. So between me and Shashank, we will take maybe 50-60% of course, but rest of the course is taken by external entities, investors, bankers, VCs, as well as a lot of entrepreneurs as well on board. And we, of course, we do provide them placement assistance as well. The first batch is right now running right now, and I can almost see many of you from the current batch also joining us here. So with this, I hand it over to Shashank. Over to you, and you can take it forward from here and share us what embedded finance is all about, and then I'll take it from there from the approach side.
Yeah, I'm just requesting remote control.
Yeah.
Thanks, Amit. Yeah. So if you look at it, how the embedded finance journey has started, we started talking about open banking and
Sorry.
We started talking about open banking, and from that API banking, and then banking banks and others, they started sharing that financial services and the banking through the APIs, and primarily the fintechs started using it. From there, that if we look at it in the last couple of years, we have been started using the word lots more on the embedded finance, like how the finance are embedded to any other platform. So that's where that we are going to talk about it. Just give me a second. Yeah. So if you look at it, in the 2019 itself, we made in our annual report that we covered in a very detailed story that world has already started moving to the embedded finance. And this was like we use the word, yes, Samir, I think I'll manage it.
It's causing a problem. Go ahead.
Yeah. I think we use the term called neo-entrants, like the guys who are trying to enter into this market of the financial services. So where that example of the Farmart, which is more like a farmer market kind of the place where they started providing the financial services on their platform, or the startups. So some of the stories that we covered. So here we'll try to get into the more on the details that what actually they are doing. So what is embedded finance? We know that, okay, fintechs, there have been banks who have been providing the financial services, then came the fintechs or the insurtech, those who started providing the financial services. But embedded finance goes beyond that. Any non-financial services platforms, which is not into the financial services space, they have their own set of the business, their own set of the customer, and providing the financial services to their set of the customers. Now that's, if you look at it, that kind of an arrangement is not new also in the industry, like Amazon. So Amazon has been doing that partnership with ICICI Bank, but it was more like a different kind of the product itself rather than a pure example of the embedded finance. But the things started moving slowly, where the example of the GrabPay, Udan, or the Shopify. Shopify has been classic example that where that what they started that they on the e-commerce platforms, they started embedding with the financial services provider more to start providing the lending services. And that's started expanding to the, you talk about Flipkart or to the Amazon of the world. While on the other side, the big tech players, Amazon or the Google, they are totally different platforms. Amazon is more like mobility platforms, while the Google is more like an internet platform. and they have their own set of customer, but they started working with the financial services and started providing the financial services. Grab. Grab is like more like ride hiring share platform similar to the Uber in Indonesia and the Southeast market. And then how they completely transition into that financial services segment. So that's a big example. So that's there I was talking about that how the transition of the embedded finance has happened. So earlier it was the bank who were providing that pure play financial services, be it the banks, be it the NBFCs, and they have their own set of the customers, but they didn't have too much insight into the customer. Only with respect to the financial services, they knew about their customer, but beyond that, what their customer does, they don't have any kind of idea. While they had their own financial services, being a manufacturer of the products, be it of the banks or be it the NBFC or the insurance, and they have their own infrastructures. And now they have been primarily focused on the deepening of the relationship, that what more that they can offer. So they have sold it the saving account. Now what more can be given to them?
So Shashank, can you take it from your screen, because I think it's causing a problem where when I admit people, it just screen goes off.
I can imagine. So I'm just stopped. Yeah, I'll do that. I could realize that because of that only it's happening. Yeah. Is my screen visible?
Yes, go ahead.
Yeah. So we are talking about the transitions, and then became the financial fintechs, those who started working very closely with the banks, and they started providing the financial services, and they got a better understanding of the customers, the behavior, because of the various other reasons that they started collating some other set of the data, and they primarily use the bank's financial services. Some of the space like wallet and all this thing they might have their own services, but mostly they started tying up with the banks to provide the services. While on the infrastructure side, they brought their own infrastructure to provide the financial services. But here the game started changing, where the platforms started coming up and they started providing the financial service, be it Amazon, Gozak, or earlier example that we've been talking about. They had their own customer, they had their own distribution. So that's where they started playing the role. Like, for example, Google. Google has their own customer which comes to their platform, does the Google search and all these things. Or in case of the Grab, when I was talking about the Grab is the link sharing platforms. They have their own customers. So their customer comes on their platform on a daily basis. Now they started, and they know that what they do, where they go. So based on the area of the works that they are providing, they have that much better insight about the customer rather than anybody else. So they thought that, okay, why can't we start providing the financial services? And they again, primarily they've been using at the bank or the fintech led providing the financial services by tying up with them. And they've been either using the bank and fintech and own set of the financial infrastructure. We'll go into the infrastructure architecture, how that. So that has been the transitions. Some more deeper into examples, if you look at it, like Google tied up with the Citibank. So as I was talking about that, you need a bank platforms. So Citibank, they worked it and then started launching the debit card as well as the Google Plex current account for their SME customers. So that's where they start launching, and they have to start the services. Apple worked with the Goldman Sachs and built that credit card that we know that Apple credit card was launched a couple of years back, and they started tying up with their giving it to their set of the customer. And Apple has a big customer because of their ecosystems through the App Store and all these things. And it was easy for, and they knew, and because of that, since they have the Apple phone the customers are using, they have that other means that customer may be using Apple Watch, all the other instrument. They have much better insight about the customer. So that's where they played the role. And those are the data that also been used to define the credit limits and other features of the credit cards that they worked out. And some of the other example, if you look at ICICI is working very closely with Amazon to providing that loan facility to their sellers on the platforms, or the Tesla working with an insurance product. So these are the various new examples that started coming, where the non-financial services started plugging those financials onto their platform.
Shashank, can I ask a question here?
Sure, sir, sure.
Okay, if you just go back to the previous slide, could you just spend 1 minute on how does the Citi Plex account work, for example? You said it's meant for SMEs. How does that work?
So I don't think they have a strict launch the services, but that's the way they work with the city to anybody who want to, like, primarily they will be going through the Google Pay. So the Google Pay is the platforms that they've been using to provide all the services. So customer may be using as a Google Pay for the merchant. I'm talking about merchant using the Google Pay as a platform. Now through the Google Pay, they give an option that okay, you would like to open an account there. So,
Okay.
so Google
Okay.
Pay is the front-end platforms that they launched it.
Understood. Understood. Okay.
So what they bring, as I told about the distributions, that's where they play the big role. So all these non-financial services have their own set of the customer. They have their own reach. Be it on talking about Amazon. So Amazon has both the side, their own customers, which is using their Amazon e-commerce platform, as well as the sellers who is using their platform. That's a wider network that any other platforms will have. So that's where they play the role, that's bringing access to that distribution, and as well as not to their this network, but also the understanding, deep understanding of their customers, deep understanding of their sellers, everything. And that's being done through the data, because all these platforms guys are trying to work out on the data. So since they are providing the various services over a period of time, they have accumulated huge set of the data. And that's where, if you look at it, these guys are trying to maximize the use of the technology on their platforms. So the data plays on a big role, and that's where they have a huge hold about it. The revenues. So one of the good part is that they already have the revenue model built into that. So since they're providing that other services to them, it's become easy for them to plug in those revenue models to that. Say for example, they Udaan. So Udaan is a like B2B marketplace. They provide lots of services like subscription, the licensing for the sellers to come on their platforms, and then providing the access to the ecosystem to sell their products. So that's where they earn that revenue. So already have that mechanism. Now what are they started doing through the Udaan Capital, which is again the Udaan extended into the embedded finance infrastructure to build into the additional set of the revenue to come through the giving the loans to those sellers. So one is that they earn the revenue by bringing them on the platforms, and then what are the sales happen. And second is by earning them through the giving the loans. And very interesting, I was reading it out that they made the more revenue from the giving the loans to the sellers rather than the traditional mode of the revenue through the licensing and other mode of the bringing them on the platform. And since they've tied up with them, they're closely tied up with their customers, their distribution network. That's where they have the control. Now, typically, if you look at it in the fintech side of the world or the bank, they may have the opportunity of the customer missing it out, because they don't have a very closely kind of a hook which can control the banks or the fintechs to hold that customer. There's no underlying the need for that. But here the customer is having a different need which is getting fulfilled. And that's creating a hook to the, like Amazon. If I'm been regularly buying on something on the Amazon, I definitely have a hook to that Amazon platform. So, and in case if any financial services comes with it, it becomes easy for me. I'll talk about some of the very good examples that it's really talk about that how the controls things works for these players.
One quick question: this Udaan Capital, is it a registered NBFC, and who takes the exposure in that case? Is it Udaan, or they have tied up with some bank or NBFC?
I think Rahul, I need to check it out. I think they are registered NBFC, but I need to check it out on that side.
Mr. Speaker. Hello.
Yeah.
Mr. Speaker, I want to add a small thing. At the moment, Udaan have their own NBFC and they use a third-party bank, both together for the purpose of lending to a player on their ecosystem.
So, thank you, Rajesh. Thank you.
Most welcome.
Thank you. Thank you. This I have already spoken about, so I'll not take it. The same story that we are talking about, that distribution. So they have their already the customers. They don't need to spend money to acquire the customer. Where that most of the financial service segment, if you look at it, they have the more stress that they need to acquire. Here they already have the customers. They have the better understanding of the customer because the customer is doing business or some work on their platform. So they have a kind of insight. They know the customer journey, what they do and how they do on their platforms, and they have access to the data. So we have spoken about. Just on a very quick, what are the driving forces? If you look at the whole of the API economy and the internet economy is evolving, those are the things giving an impetus to the exposure of financial services in form of API and making it anybody to consume those services. So consumers are primarily, their behaviors are changing, mobility, the gaming, the e-commerce, everything is the customer behaviors are changing on that. And the internet economy is like it's a platform. So wherever you have the platforms, you bring into the customer, bring into the partners, and expose the financial services. So that internet economy, the democratization of financial services, if you look at it across the globe, open banking or the open finance becoming a buzzword, and the world is moving towards that. Even the most of the government different reasons also pushing for the banks to start exposing their financial services in form of the APIs. So all the open APIs coming, the banking as a service platforms, all these things are coming up, and that's making it easier for anybody to hook those APIs on their platform and start providing those services. Then emerging technology, the technology plays a big role into that transition of any new financial segment. If you talk about like embedded finance, like big data or AI/ML, because these are primarily helping the platforms to know more about the customers, know better about the customer financial needs, and provide that customized financial services to these players. And then lots of innovations are taking place, the government financial inclusion, these things are pushing. So these are all factors are definitely contributing towards that growth in the embedded finance, and we'll continue to see more and more such platforms coming into that this domain and start providing the financial services. So this is just a snapshot that what are the different financial segments are there, and where how the players are playing it out. So if you look at it, the payments, so one side you have the pure play, the payment fintechs who are providing the financial services to their customers either on their own or in the tying with bank. While other side, you have the players who are working with these partners and providing this payment services, be it a Lyft or the Y. These all are plugging their financial payment services and providing to their set of the customers. While similarly lending, like Shopify or the Cars24, they have their own set of the customers who are either buying the cars or who are buying the e-commerce stuffs on their platforms. And they're tying up with the lending partners to provide a various financial services, like it could be in the form of BNPL or it could be in the form of the EMI loans and all these things. Now, so embedded finance is not only the now restricted to the payments or the lending, which has been primarily mostly used services, but it has been now extended towards the insurance. So like, so for example, we have seen Ola, or if you're traveling to the Make My Trip, people are plugging in this the micro insurance into their products. So these guys started working with the insurance partner in the back end, and then plugging those financial services in form of the insurance on their platform. The bank accounts. So now some of the players are moving into that, adding the bank accounts itself. So while on one hand you have the Revolut and others who are providing as an neobank, working with the banks or independently provide that bank account, while the Google and all these things tying up to provide their set of the customer those accounts. And the cards also, lots of innovations. The third parties platforms are plugging those services on their platforms. So not going much into details, but health is a one area where that lots of embedded finance opportunities are there. And we have seen that the works are mostly is happening into that. The Practo is already tied up with RBL to provide a kind of a credit card to their set of the customers. Zealous is working closely with their health infrastructure, all the ecosystem players to provide that a better payments infrastructure to them. So lots more work in happening on the health. And the other major area of opportunities happening on the edutech side of it, where that because of the pandemic, we have seen that how the education platforms are emerging in it. And there becomes a good source of, because they have their customers, and these are some of the programs maybe at a high cost. It becomes easy for to plug in the loans facility to their customers so that they can buy that product from their platform. So that's where the edutech is again emerging in a big way. The mobility, that's where it has been. Actually, if you look at it, one of the embedded finance early stories about that, how Uber has a plugin with the wallets and all these things to provide the seamless payment services. And things moved to the Grab, Gojek, Lyft, and all the other guys who started plugging. And they extended not only from the payment, they expanded into the wider other area of the payment financial services to their customers, to their drivers, to all these ecosystems. They started providing the financial services. This is another snapshot of this, all the summary that we have been spoken about. So this is about Grab. So Grab, as we know, that we started as a kind of ride-hailing platforms, and they embedded lots of other services, and then on top of it, that financial services. This is very interesting examples that I just want to touch upon. So Stalabs is one of the very interesting IoT-based milk dairy collections startup, which operates in the most of the parts in India. So how do they do that? They're tied up with the dairy, and they have an IoT device which they use at the collection centers, where the farmers comes and pour the milk, and through the IoT device they are able to figure it out what is the quality of the and the quantity of the milk, and based on that they're able to figure it out what is the money that need to be given to the farmers. So that's where they work with it. So they have a chain of the collection centers where their devices are there, and all these collection centers are tied up with the dairies. So the farmers comes, pour the milk, he gets to know that okay, what are the milk that he has given on that particular day, and then what is the money that he has received, because the daily rate card has already been worked out. Now, using this platform, Stellar has a much better deep insight into that what kind of the money that one farmer is making by pouring that milk at the daily basis over a period of 1 year or 2 years. So that's a complete insight that Stellar has got into that. So for example, one farmer is coming and pouring a milk of 5 to 6 liters a day. He's coming for the last 2 years. He knows that okay, 300 to 500 rupees money that he's making. Now, those customer, in case those farmer need a kind of financial services, maybe in the milk and okay. Before I get into that, so normally when the farmers pour the milk here, so from the dairy they get the money from after 15 days of the pouring the milk. So they started looking at that these farmers had their different needs. So one is the need that sometimes they may need the money on the upfront. So they come and pour the milk of 600 rupees. They may need money at immediate basis, or they may need money for their to buy the feed or the fodder for their farmers for their cattle, and it could range from 3,000 to 5,000, or it could be possible that they may need to buy the cattle itself. So these were the different financial needs. So what they worked it out, and since they already had the access to that set of the data, they worked out with the financial firms and banks and the NBFC, and made those provision of the financial needs through the lending different loans in the form of receivables or the small loan to these farmers, and it was easy for them. So that's a very interesting story. Now we so this is these are different devices, IoT devices that they use at the collection center, and through that all the data comes, and that's they build on this whole lending framework that they are building. So this is that I'll stop here, and we just wanted to give a quick glimpse into that what is embedded finance. Now over to Samir, primarily where he will talk about that. How do you go about building that kind of a business model?
Thanks, Shashank. I think this is the journey, right? This till now, I think you got a framework of how things happen, right? In terms of what others are doing. Now, this particular second segment is about how to build for it. So, I think we have been lucky enough to find such startups where with whom we have actually been able to build these businesses, and we'll just share whatever practical experience we have had in terms of building those frameworks, process, and plans. I think that's what I want to try to bring to a table. Now, I think from the first part, I think understand the customer first, right? So normally what happens is that when you work with any of these startups, so right now, as of now, we are working with at least 3 of them, and each are in different stage, right? So when you start working with them, what happens is it's very difficult for us to figure out what the segment is. So typically you have to understand what the segment is and what are the various opportunities are there. Now, for example, the personas of the customers which exist right now on the same platform, let's say it can be of any supply chain, any platform. It may have a personas of customers being already available. It can be supplier or a buyer or a retail customer, and you may be from a different background, or you may have a different need. So we end up doing a fairly detailed analysis of what kind of expectation these customers have, what kind of money. For example, if you have to lend to them, what is the typical expectation they will have in terms of money? What is the repayment capacity they will have? How do we ensure that within the platform itself we can do the repayment? For example, if we can have control to both the payment cycle as well as the collection cycle, or the entire financial life cycle of the customer, if we have full control, then we may be able to give lend on the same platform and as well as collect. So we try to build the entire journey. In some places we have been able to start with payments first. For example, one of the cases where we start this journey is that we said, let's digitize first the payment because it's all happening in cash, and then added more layer, because once the payment was on the platform, the customer's Jandan account was getting credited, and then figuring out that can the money also flow of the loan side on that platform was also very easy for us to do it. So I think that's the first part. Figure out what the entity itself wants. For example, let's say when you're working with such an embedded finance company, we have to figure out what their business is, what the customer size is, what are the segments are, what is the kind of business which can be done on top of that, be it payment, lending, insurance, and then figure out what is the revenue model which they would like to have. Some of them will say, okay, I will let the money be handled by somebody else. I'm just looking at one slice of it. I don't want to take any exposure. For example, they will say, I'm not interested in taking any risk on the loan. Therefore, there is zero FLDG. But I want to ensure that I get some money out of it because I'm the one who's enabling it. I also want to control the whole process. What should not happen is that entire control is on third party. Everything will happen on my platform, and I'll control. And the backend, you can have any kind of APIs you can have. Some of them on day one may have a different view. So we try to create the whole structured thought process strategy upfront before you go forward. So understanding customer and business segment is very, very interesting. Then we end up designing the product, right? For example, what is the kind of schedule we need to look at for loans? What kind of payment structures are possible? What kind of collection documents and process can be done? And figure out the value proposition. So the point is, when you work with these enablers, with these platforms, they may have a vision that this is the kind of money we make, right? But the idea is that instead of thinking too much, how do you ensure that within maybe 2 or 3 or 4 months, we have a framework in place? We create an MVP, go back to with that idea or with the concept, go back to the partner. For example, for let's say this particular business where we are working right now, most of them may need lenders first, right? So before we go to lender, we have to figure out what is the kind of lending can happen. For example, when you're doing car loans will have a different lending. If you are looking for agri, it's a different one. If you're doing a PL, different range. So what kind of risk of profile of the customer is there? What kind of risk? If banks are willing to give loans on that, it's always better, right? Because if banks give, the cost is always less and customer is much more happier. So we have to figure out the risk profile of the customer, figure out the appetite, and go back, and with the customer offering, we go typically to the lender or the partner and see to it that they understand the need. On it, in some cases, for example, we were doing the payment piece. We went with a full framework and the sizing of the business, and went to the payment to the bank and got it done end to end, including the variations which our client was looking at. So basically, understand the customer and business strategy, figure out and design the product, and go back to the lender and get it signed off. I think important part is that somewhere in the journey, we need to look at, can we kickstart the business, right? A lot of times we go iterative, right? So it is good, but we have to start somewhere. A lot of time we have seen 6 months, 12 months go in saying that we'll start only after integration. So technically what we try to establish is within few months, with 3 to 4 months, we start business, right? So for example, can 80% of the work be done still on paper, and we start the business and figure out if it's going to work end to end or not. And based on that knowledge, we start trying to digitize it rather than the other way around. So while you may be thinking it's counterintuitive, but idea I always have is that the people who are right now running this business, who want to start embedded finance, may not know much about finance, and they will make a lot of mistakes in building up their stack and all the processes. So it's always good for them to be exposed to the needs of the market. What is lending? What is the FLDG? What kind of risk exists? If it is payment, let's say, how does the NEFT RTGS payment happen? How do you ensure that when you do IMPS, the response is on time, the process, stack, reconciliation, all of them are critical. How do you ensure that between these two entities, reconciliation process are well set? So even if you do X on paper, and if you do on digitally, you still need to ensure that in first few months you reconcile very well, and you should not have an NP or issue around that. So any which way, the portfolio also has to perform. So that's what we do. Start the portfolio, build up it, and then we go forward there. In some cases, of course, between a startup and the lender, a startup or an insurance company, startup or for example, right now we are planning to set up a insurance business for a distributor, for a platform as well. And there again, the segment is going slightly different. Figure out what is the need of that insurance side, what kind of products can be sold. So all of that we can do. But idea is to have a pilot very quickly, so that we can see there is a real offering available or not, or are we wasting our time. And then you'll also need some tech enablers as well. So while you have business side alignment, you may also need technical integration as well. For example, you may want to read the document, so you may need a reader for that, or you may want to do a statement analysis. You may want to integrate with a platform like Perfeos or somebody else. We need to ensure that some underwriting is to be done. We find another platform. So we want to ensure that when we start this journey, even the embedded finance player also gets a fair bit of technology ready, before and so that we can onboard as the journey continues. And of course, go to market, launch the product, learn from it. Okay, I think this is important. When we run a portfolio, we run transaction, how do we ensure that everything is well taken care of? And the training is also very critical, because these organizations are largely not focused on finance. For them, maybe security processes are not very critical. We have to ensure when we do these launches, we ensure that each one of these entities gets to understand, have a good understanding of how finances work, how accounting happens, how reconciliations are done, how security assessments are done, audits are done, because then otherwise the banks on the other side, lenders on the other side will be exposed. And therefore you need to ensure that that is also taken care of. So we go iterative, and then we go for a wider launch. That's largely, and many times we have entered these companies without their embedded finance head being available there. So we start with as almost like a co-founder, build it for them and hand it over. And then onwards, we start supporting as we go forward. So that's largely the journey we have done most of the time for our clients. When we do this build up, this is just an architecture we are putting it. Not that we are endorsing any of these startups right now, any of these entities. It's just a framework. They are not our customers. It is just a framework we wanted to bring on the table. That when we want to build for some entity, please ensure that whatever segment and services you want to look at, figure this out, so that the customers, which can be merchants, it can be the suppliers, buyers, retail customers, any of them, ensure that those needs are taken care of. We go back. You can directly integrate with a bank. We'll talk about few architecture, but you have opportunity to work with a single entity in between. It can be a Setu, or it can be QPS, or it can be open, based on what the needs. It can be payment service, it can be a collection service. I don't know what services you will need. And you may also go to one player who actually has integration with multiple lenders as well. So you integrate here, and then of course in the back end you have to ensure that there's a bank, insurer, somebody else in the backside. So you can have an opportunity to integrate directly or go via multiple entities based on the need. And that's what we have displayed here. This is basically a basic architecture where there's a direct integration between a bank. So bank is here. You have a payment API payment management platform here. It can be an aggregator or it can be individual, and then you can be a partner on top. Same thing, you may have a different way where you have an aggregator layer, which is third party, like a Setu or somebody else, who's embedded and has partnership with multiple banks. And therefore you can actually have access to multiple networks. So even if one lender is not lending, you can still lend through multiple. So you can have a choice to go directly to these players, the banks and NBFCs and lenders and the insurers, or you can go with multiple partners as well, so that you want to reduce your overhead on partnership side as well. So that's also an opportunity you have, which is where we help you in getting all sides of it. And
Samir, can you go to the previous slide once?
Yeah.
No, before this.
Yeah.
Yeah. So can you just explain this part again? The middle part. You said the bank can be the aggregator also. That's what you said, right?
Yeah, so it's not aggregator. Bank is offering their own services. So you basically are directly working with the bank. So let's say you are the bank, right? Now, when you integrate with partners, this visibility will be other way around. You're saying, I need to have a very strong API management platform, which has all the developer total API sort of control frameworks, sandboxes. And on top of that, you are directly onboarding partners. So you will be the partner here. Let's say if you are running your own company, let's say you have a supply chain for, let's say, clothes. Now, you will already selling it to, I mean, you already have a buyer and seller, and you want to embed the bank in it. So you have to do a direct partnership with the bank, and this bank runs this business.
Okay.
Whereas if you look at the other case, it's actually, it can be third party integrated with multiple layers.
Okay. Understood.
And this is largely what we have been able to do. I think embedded finance has become, I mean, to be honest, we never realized that this segment will grow so fast. But we have our personal belief is that next 3 to 4 years or 5 years, embedded finance will be bigger than the fintech segment itself. And over a period of time, all the fintechs will get sort of somewhere aligned with these larger companies, because their scalability is much higher and they don't have to spend any money on acquiring, managing, maintaining, controlling them. So this segment will continue to grow, and we personally believe that there's a lot of value which we all have sort of to align with this. So that's largely what I wanted to bring to a table, but happy to take questions, happy to figure out what are you looking at it, and sort of do a Q&A as well. I know it was a bit fast, but I wanted to give time to people to ask questions, and would be very useful to hear your views as well, both ways, views as well as questions.
So I have few questions actually. How this embedded finance as a concept is different from BNPL or online lending?
I think so. Embedded finance starts with so when you look at BNPL, let's say Simple is doing BNPL. Now Simple has to acquire customers, partner with somebody, and run it. Largely, that's what happens, right? And therefore, the ownership of BNPL is not with Simple in a way. But if you go to same thing and look at from a framework, let's say of Flipkart or Amazon, so they literally own this BNPL of their own on their own platforms. Therefore, they have a ability to make more money out of it, the more margins out of it. They can do lending on it. They can do. They have. Let's say, for example, when Google today has or maybe Amazon has Amazon Pay, it has a framework of running that under the same umbrella and remove the friction as such. So it is built by larger players who already have aggregated customers and offering payment as an odd add-on to them. BNPL per se is running both ways. Simple or let's say anybody else which is independent platform is running and directly acquiring customer and bringing it to other people, other let's say shopping platforms. Whereas in this side, Flipkart owns their pay later, and therefore they can define the journey they want. They don't have to share that information with too many other people. I hope I answered your question. Any other question on the segment side in which you sort of is not answered till now?
Yeah, sir, yeah, go ahead, Atalji, go ahead.
Sorry. Samir, I mean, do you think that, going forward, let's say over the next, 24, 36, 48 months, would you actually see that, the fintechs will start getting acquired by these embedded finance players?
So answer is obviously yes. Okay, just one question. I think some of you are asking, can we have access to this slide? I think we will definitely give access to most of the slides, maybe one or two to remove, but we will give you access to the slide. But for that, you need to give the feedback. Feedback form is already, I think, shared on the chat box. You please fill the feedback form. All those who fill the feedback form, we'll share the this artifact as well. Yeah, sorry, Atal, I missed your question.
Yeah, no. So my point was that, given the fact that you're saying that ultimately, the embedded finance players obviously have a lot more data, a lot more information, which they need not share with, let's say, the fintechs of the world. If you start looking at that scenario, then to my mind, embedded finance players will slowly start acquiring the fintechs, and then I think the survival of the fintechs itself over the next 36 months could become challenging, right? I mean, today, for example, I don't think that venture funds or private equity guys will be looking at funding any fresh e-commerce players because the scales are possibly not going to justify financing any new players. So similarly, that would be the scenario for fintechs then.
I think so. Let's put it like this: if they got get acquired by a large player, or let's say players on the e-commerce side or any other side, even on edutech side, I think it's a good exit for them, right? So finally, the is good. But this is how we believe that most of them may go away that way because there's too much of cost involved in acquiring customer. I mean, they will have end up giving cashbacks, which is what you see right now. Some large players are just burning money to acquire customers, which is not the case because they already burned this in their own business model, right? E-commerce guys or edutech guys, they've already burned that money, right? So they don't have to do any more.
Right.
When they acquire these fintechs, it's likely to happen. I think when Shashank was talking about some of these right players, they've acquired multiple platforms, be it on the POS side, PG side. They kept on acquiring because they saw it as all as an idea of how to remove friction. So I think it is bound to happen, and it'll accelerate. So it will be in a sense good for fintechs because you have to realize that if you spend 4,000 rupees, 3,000 rupees, 200 rupees, whatever the amount to acquire a customer, the margins are not that high initially at least. So, but
Correct.
for example, when we are working with a player which is also already doing some large business for in some other segment, so their margin already maybe around 4.5%. Now, when they add this layer of lending, and they're also able to source the entire business, their margins increase more like a 6.5. That is basically they have a layer, so they are able to add, and the amount of cost for doing this? Actually, very little. In fact, it is beneficial to the platform because with this they don't have to share data with third party who can actually use the same data to take it to somebody else as well, right? So
Absolutely.
the risk of the control levels go much higher when you do it today. I mean, it becomes also seamless, right? Amazon Pay, ho, yeah, I mean, each one of them has their own card, right? Just imagine Flipkart or Amazon, they have their own card, own experience, own journeys, and they would not want to share with somebody else, right? So it's a good way of doing it.
Yes. Yes. Thank you.
Yeah. And the only thing is that the risk which carry is that uh, they for them to understanding this business is very difficult. And this is real experience. I can tell you that what happens is that they have a very large team, let's say, working on some other segment, right? For example, it can be education, it can be e-commerce, it can be about manufacturing something. They are deep into it, right? And for them to create this separate silo or separate group, which is fintech group, train them, make them ready, and take them at a very high level, fund them is is a trick, right? I've seen many of them failing because they're not able to support them when they ask for money, money is not provided. They ask for technology, technology is not provided. So these issues are still there while it looks all easy on paper. But on the delivery side, I have seen enough issues. And this is what we said that first let the business prove itself, right? Let's say, for example, if you have, let's say, done, let's say, issued a loan of, let's say, 5 crores or 5 lakhs, 50 lakhs, and then you see performance, or maybe you are doing payments, right? You are doing multiple payments, and then you're seeing performance, how the response times is customer happy, is customer showing different experience, then you start doing anything else, right? Otherwise what will happen is the internal teams are not convinced. There's always a friction that why the hell are we doing this, where is the margin. And I can tell you that in last so wherever we were, first 6 months to 8 months are very bad. Only
Yeah.
one guy, founder is aligned with us, or founder plus one person is aligned, or maybe five people, and maybe
Mm.
the team is in a different page. But over a period of time, I've seen that the things change, right? We end up with all co-founders talking to us and then say, "Oh, let's do it. Looks like logical." The cost base is also not very high. The technical side, once we add the security layer to their platform as well, they also feel more secure because the original business was exposed as well. Because in the way you have on the payment side, lending side, the kind of regulation which exists, they don't exist on other segments. So they also leverage this and they feel very happy saying that now they are able to sort of establish a baseline everywhere. So I think it's an iterative journey for most of them in the market. Any other
True.
question? I think it's the second half, and I'm finding so normally what happens is that I close the sessions very early because the questions keep going on and on, and so maybe I'll try to describe where the money is getting made in the market when you do these kind of deals. I think that's something which typically people should know. Now, when we let's look at the example of lending segment, right? Now, in lending segment, money is made in maybe two or three areas. First is purely on the processing fee side, and we have seen a lot of money exchange happening at that stage. So let's say if you have a 2% or 1% processing, most of the money is taken by the platform. Actually, it does not go to the lender. Actually, it's taken away by the platform because they take care of the most of the activities, and that's where the money is made. Second part of the money is that they are part of the interest which is collected, right? So from an interest perspective, let's say if the overall interest per month which is taken is, let's say, 1.5% or 2%, it depending on the deal and complexity or risk size, I've seen people taking anywhere between 0.2 to 0.4% of the whole deal on a monthly basis as well. Because they are saying that they are embedded in the process, and they are also taking care of not just origination, they take care of the entire repayment as well as at the end the collection as well, depending on what the skill set. Many of them go and leave it from a sourcing, disbursement, and repayment. Many of them are, since they don't have on the ground people to collect, maybe drop the collections off and hand it over to the bank or third party. But these are the places where they're typically able to make money. So they make money on the origination side, or maybe 1% or somewhere around that, and maybe anywhere between 0.1 to 0.2 to 0.3, 0.4 on the interest per month basis. This 0.1 to zero point 0.4 is also linked to the risk which they take, right? For example, there is a concept of FLDG. and first loan default guarantee, which is basically default, which may the NPA which may approve, what percentage of the NPA will be taken by these entities. Based on that, it is also that taken. So if the lender, if the embedded finance guys ready to take more risks, then logically, obviously, they actually get more returns as well. It is also, so this is how it is, of course. So you go two sides of revenue and one is loss. Whenever the NPA happens, some NPA also, or the loss also accrues to the platform, depending on the deal itself, right? So it's complicated. I can't really share too much of it right now because it can be drawn on a piece of paper, but largely that's largely what we have seen in the market, and it's or tons of negotiation that happens on the table, depending on the performance. So a lot of times what happens is that we start with for an early stage company, we typically start with a bit of a loss making stage for the embedded finance guy, because they don't know the formula, the process and all. They are looking at primarily some lender to prove their platform for themselves. And then once the portfolio starts working, once the deal size starts looking viable, then they go to hunt for other partners if the first partner is not good enough. Generally, it's always good to have multiple partner strategy, both for lending, also for payment, or for insurance as well. Now, for example, right now when we are working on the insurance side, we are also doing the same process, right? Hunting and figuring out how do we ensure that we are engaged with more than one partner on the insurtech side, and ensure that we have multiple insurance manufacturers also on board, so that the scale can happen as well. So I think that's the idea I have. Again, many of you are still asking that one-on-one to me, saying that can we get access to the document? Answer is yes, you can get access to the document. Just fill the form and let us know, and we'll share the email back to you. I think one question I'm just getting is that can you just, I mean, the question is that you're talking about this bazaar, what exactly it is, and how do we participate? I think the question response to you would be that it's there on 26th of this month. If you are a seller, which is a fintech, which is wants to, or maybe tech enabler, which is wanting to partner with the bank, you want to offer something to them, then you can sort of come back to us. You can, I mean, Shashank, maybe you can give Shrikant's number out here on the chat box.
Yeah.
His mobile number, so you can access him and he will tell you. So there you will get to meet, let's say if you're a seller, you will tend to meet maybe 8 to 10 buyers. And if you are a buyer, you will get to meet 8 to 10 sellers. Like in any process, the seller pays for entire deal, but buyer doesn't sell. So it's like a MDR concept. So if you are a seller, you will have to pay some platform fees. Otherwise, buyer doesn't have to sort of pay anything else on the platform. One more question I'm just getting is that how do you engage with us? I think not very complicated. You can always talk to Shrikant. He's there. He's the third co-founder, heads our partnership and sales, and you can talk to him, and he'll sort of reach out to you and plan next steps with us. Not too inaccessible, because India is largely the ground for us. But I mean, many of you, if you are right now, we are building some entities in Middle East and Southeast Asia. We are very happy to do that. But I think 80% is in India. So I think you will find us easily sort of available for planning this activity. I think with this, we are tending towards closure. Shashank, anything we have missed? Anything anybody else wanted before we close?
No, sorry. I posted a Shrikant number on that.
Yeah, so the Shrikant's number is already there on the platform. You guys can have a look at that. Okay, I got the next question is that when is the next cohort of this training starting? I think we are doing this one-day training already. You can join on open banking if you're looking at on 23rd of this month. You can again talk to Shrikant on that. And the next long-term cohort is starting only in September. So right now, our last cohort is running. We started in April, and it'll end in August mid. And the next cohort will start on around 1st of September, and you can join that as well. So that's what the pointer is. I don't have any further questions. We are about to close before. And how many feedback have you got, Shrikant? Get anything else, guys?
So we'll fill it up once this thing gets over. I'll then fill it up.
Okay. Perfect.
So Sameer, one last question from me, if that's okay. Whether we've still got some time.
I have time. I mean, the questions are not flowing, so I said, let's close.
Sure. So just as a question, how are the current incumbents reacting, given the COVID scenario, most of the financiers could be considering drying up the tap at this point, right? Given the increased risk. So how does an embedded finance player react at such a time?
I think wherever we are building, I think everybody is trying to play a slightly long-term game. The timelines are much easier now, right? Because the some of the actual use cases are right now stuck, right? And I mean, for example, those who are in mobility don't have the business. So I think what they're using, and last time also this happened in the last cycle, many of them build their businesses during this process. So their tech capabilities are much more available. So many of them are using this right now to tie up and start. And also, even from a lender perspective, they are not trying to open up new models, but if there is a risk mitigation available on the side of the embedded finance players, the bankers also willing to start some MVP with them before we do. So right now, wherever we are helping, we're not seeing resistance from their side. From InsurTech, payment gateway, lending, supply chain, I'm not seeing any resistance. They all want to figure out a new start because you have to realize both sides have time as well. So I don't think there is a huge amount of money which will flow on the tap. But TAP will have a trickle effort so that MVPs can be done. But the real business will flow only when I think we come out of this wave, or at least the real business segments also start throwing numbers.
Sure. So I think it's basically I would read that as there's a need for increased risk participation. Would that be a fair way to summarize it?
Correct. Because I mean, we were trying to solve this for one client, and the other partner was asking for slightly higher FLD, and it started. And the other thing I will tell you that hunting is always useful, right? So we hunted for one partner, and finally one partner we could get who was willing to take the risks. I mean, for them it was a cream area. For other players, till then we could not find. Everybody was asking for some FLD. But we finally found a player who was not looking for any FLDG, saying that this is a segment of choice for us, and we'll do. So I think there's a lot of sort of hunting as well to be done, which was always the case, not just in COVID, before COVID also. I think you've always seen that.
Sure. So just another point from me is, given the diverse nature of products that you're building, and you alluded to this briefly, when you're kind of creating a home loan product, the underwriting for home loan is very different from when you do a vehicle loan to when you do agricultural equipment finance to whatever, right? So depending upon the portfolio of products that you're building into your platform, there are so many different skill sets that you need to incorporate into your organization. So are companies equipped to manage such complexity, given that these platforms are already having the pressure of showing growth in their core business, right? Given the venture capital money behind it, it's almost like running a bank within a business, isn't it?
I think let's look at slightly differently, right? From a data source perspective, you may be surprised that since they are in the originating side, they don't have to do much. They may already have the data of a fairly different type, which you can use for your own segment. So it is an add-on. So when you do an MVP and start, you really depend on the lender's capabilities as well. And you are giving an add-on to the lender's capability. So lender already has this framework for underwriting and all. You are saying that on add-on, I also have some extra data. I mean, in Stellar's case, they had extra data. And therefore, that extra data, which is that how much milk they were able to buy, sell, all of that was already there. They didn't need anything else, right? Based on that, lending could be done because the accounts never had money because it was all cash. So what I'm saying is that old world value is already there. For example, if somebody is using sort of a statement analysis, somebody is doing, let's say home for home loan, you have to do a valuation. Home loan, you have to do a BIR. Your home loan, you have to do the whole legal process. That any which way is happening on the other side. So
sure.
Nothing, you are just adding one more layer. And in case of, let's say, Square Capital, Square, what is that company? The Square, the property brokers, right? They are getting into this side. They have knowledge of the other side as well, because they're already selling properties. They have knowledge of legal as well. They are saying that they can, when they build Square Capital, they are able to do the lending much better because they bring that nuances as well on the table, which along with the lender can actually add more value.
Absolutely. So I think what I hear from you is you've got to pick the products that you want to play in based on what your core capabilities are. And as long as you restrict yourself to that, you should be fairly okay. The other piece is as long as you've got your own book, it really doesn't matter, right? Because you could decide to lend to whoever you need to, as long as it's, you're well capitalized.
No, but why would you do it initially? I mean, that you become an NBFC and you need all the
Exactly. So it's a completely different competence.
You most of the guys do the simple trick, right? They start as not a lender on their own, and they move to the NBFC stage at a different point because that's a complicated process that also needs a lot of compliances and process and all. So they typically all of them start without an NBFC license and then they grow into it, right? So that's a learning process, right? So I mean, that's how everybody business builds, right? So they're saying, can I do it? Can I churn something? Can I get some revenue? Only when you reach a level where, let's say, you have been able to prove that this model works, this business is working well, the NPS levels are low, or that insurance is getting sold at the right price point, there's a margin to it, or the payment business you're there, you're able to make some money out of it, you're able to charge some premium to the customer, then you will grow from there. So I think it's a learning for the organization as well. And I think anybody who expects that this will happen, MVP will happen in 3 months is good. It can happen. But anybody who says that within a year the business will grow seriously large and we will start making money is not correct. It doesn't happen that way. But I think the first 3 months MVP happens, and the next 1 year goes into building the stack, getting it right before you see the scale on second or third year.
Yeah. So more importantly, the way I see it, Samir, it's also from a customer experience standpoint, right? Because you might get it going, but in times like this, when maybe a couple of taps dry out, you should have the experience or expertise within you from a banking standpoint to kind of structure it correctly to still get a line going, right? Because you can't commit a line to a customer and not give it, because it just creates a complete negative impression as a platform, right? So I mean, that's largely where I was coming from more than anything else.
I think I mean, going gets tough, the tougher gets going, right? So you have to
absolutely. It's an extremely complex business, and obviously having the right skill sets to run it is extremely important.
And in current days, keeping your head high and still running despite doing so much of negativity around, I think even much more tougher skill right now.
Absolutely. Great. Thanks for indulging me, Samir.
So Arjun and Samir, just to add to that, does it make sense, then to follow a co-lending model rather than do a pure 100% lending on your books?
I think Atal, when you go for a co-lending, you're assuming that the platform has to have a NBFC license already. If you have an NBFC license, you can play with it, but on day one you won't have, right? That you will not be able to do it. You will have to depend on the license of somebody else, and you will only play on as a margin player there. So you would not have that kind of power which you think you will have. When you have a license and all of that, then you can get into co-lending.
Fair enough.
Hey Samir, hi, how are you? Sorry, I just thought of one last question. If you can.
I repeat, I have time. My next meeting starts only at 6 o'clock. I have time.
Awesome. Great. Thanks a lot for setting this up. I was just curious that you did not cover the.
Can you give a quick background, because others I know personally, so I may not know you. Right?
Oh yeah. My name is Pratik. I work with a small startup called Decentro. You might have heard of it. It's an API infrastructure platform.
I think we have covered you guys in our report as well multiple times.
Yeah. Yeah. Thank you so much for that. So we are, in fact, we are evaluating this space as well, just looking at it from the sidelines. I noticed that you did not cover the Open Credit Enablement Network, which is the OCEN. And eventually, I see in OCEN not a lot of lenders are there. So I just wanted to get a sense from you: are banks really ready for these partnerships as of today? Although I understand that it's quite easy to take a lead and take it to the bank, but eventually these are very deeper, partnerships which have FLDG, high skin in the game, and a lot of big fintechs are doing it as of today. So just wanted to get your sense: is it too early days for the bank? Will banks adopt OCEN and then sort of probably start these partnerships, or maybe OCEN might take a backstep and these partnerships will continue growing? Just wanted to get your sense there, if that would be super helpful.
I think I mean, of course, we have done OCEN multiple times earlier as well, so we did not do this. It complicates as well. But OCEN, okay, so I have a different thought process, right? My thought process was always that the country may not have needed a OCEN. What the country needed was more of a NLCI, National Lending Corporation of India, which had not just standardization, but also the API is ready for integration. Now, in the OCEN framework, while the prescriptively the API structure and standardization is there, but it's still point to point, right? For example, one bank to you may have the enablement, but you still have to tie up, still have to do all the frameworks and process. Even when the platforms are certified, you still need to do it, right? You can't say that third party certified, I'm fine with it. You still need to do a lot of work around that. I think that's and maybe the banks will create an adapter over a period of time. But I somehow feel that NLCA concept would have been better. On one side, we are on the payment side. Funnily, we need one entity, and then now NUEs and everybody else in one place, which is very optimal already done. But when the process is not so optimal in lending, nobody is putting their hand out there. I think India has to lead, and that's what our proposal was. NLCA. And maybe every startup will also try to build this, right? But the point is, I'm going to end up competing with each other, and some of them will become scale, right? So they will get funded, they will become an alternative. So maybe the current, I mean, you guys are building maybe current generation Mastercard or current generation Visa as well on the lending framework. But I think my personal take is that banks will also get sort of irritated, or fintechs will also get irritated, because everywhere they will find a separate adapter. You like it or not, if the only if the APIs are prescriptive, they will also not solve the issue, right? Because everybody will interpret slightly differently. Until unless you have somebody saying, "Boss, mera chappa hai," UPI ko lagane ke liye, I mean, everybody talks about UPI now, or maybe 4 years back. But in 2015 March, when the UPI, we did the first POC. When we were doing POC from the bank, हमें भी नहीं पता लग रहा था क्या हो रहा है, right? Because we were trying to, I mean, it was a hallucination, right? And there was no support coming from too many banks. And I remember some large banks very anti it, right?
Yeah.
It takes it so much time, यार. आधार को बनने में इतना time लग गया जब गवर्नमेंट लगी. तो ये तो अपने आप में. So okay, I think it's a slightly long shot. And personally, I'm all in favor of it, but I still feel that a third party in between, which is more of a aggregated framework like NPCI, and it's a framework which exists today, which is larger, which will be very useful.
Yeah, I think that is super helpful. In fact, I sort of agree with your thoughts as well. Ki eventually, some of these companies, will end up building those platforms such that it's very easy, let's say for fintechs or anyone to consume it. I think that that maybe companies might eventually win the race, and before something like an OCEN is even conceptualized. But higher, I think even we are seeing a lot of those use cases as well. So yeah, definitely quite interesting times. You make an interesting point on UPI as well. I think it will take time for sure. Thanks.
Faster in Bangalore in techies' mind, but bankers don't move in that direction, right? So bankers may be fast, but not in the same direction. So getting, I mean, if that be the case, account aggregator would have been live 3 years back, right?
Yeah.
Not live. I mean, Shivalik Bank become a small finance bank. They became a small finance bank in 4 months flat or 3 months flat. But account aggregator license has been there in the market for 4.5 years. Damn it, nobody is able to take it to real production, right? Though it is gone, but not fit to be.
Interesting, very interesting. I appreciate your time. Thanks a lot, Samir.
Anything else, guys? If not, we close. Thank you, guys. See you. Bye.
Thank you.